Hi, Warriors. How's everyone doing today? It's Thursday, day before the NFP. I talked about the NFP earlier in the week that my philosophy and my course of action is to have my book squared or very few positions on before the number. That if you're anticipating which way the number is going to take the market, it's more like a binary bet. It's like roulette. Whereas if you wait till after, see how the market reacts to the number, and then it enters different levels that you have an interest in either buying or selling, that you do it there. I told the story when I was moderating LAR on FX Street that one of the attendees told me, Dale, I bought the euro before the NFP. It was a weak number, rallied 100 pips. And I said, good guess. So that's about what it is when you're taking big positions from the NFP. I know that some of the jobs numbers have not mattered that much in the last several months, but I think that with what's happening and Yellen flip-flopping about rates and mainstream and bond vigilantes paying attention to what's happening here in the markets, that the NFP will become more and more important. So we have silver attempting to make new highs for the move. Similar thing happening here in the gold. So you have a weaker dollar supporting this. Gold hasn't done it yet. Silver about 20 cents away from doing it. I actually took a shot. Not sure if this is going to work. We could end up with a 3 drive here, but I'm down 10, 12 cents on this silver trade right now. Stops are at 27.20. So I thought we might have a failing rally. If not, I'm gone. It's okay to be wrong. It's not okay to stay wrong. And now I want to just go ahead and review the week and make sure that you've squared some of these positions. There have been a lot of very good calls made here on the reopening of TradeGate Hub. The first call was a short in Euro USD up here at 2070. You had pretty close to 85, 90 pips on that trade. Immediate gratification with no risk. I talked about taking partials. If you can't make money when the market moves your way in FX, 80 pips, you need to go back to the drawing board. We're going to see if the dollar fails or not. We had a nice buy in the dollar earlier in the week that we had a nice little rally. And this is why I want to talk about partial profits, because this was the buy zone on Monday. So we had a nice little rally from 90.88 to 40. And if you didn't take partial profits, here you are, right back to your entry. You didn't put anything in the bank. And now you're possibly in a risk situation going into the NFP. I keep stressing that you're only paid when you take profits, and to take partial profits so you don't have to go through when things are ranging and not becoming decisive, that you put money in the bank when you have the opportunity to do so. So this too was an accurate call. Yesterday talked about the crude oil. We were trading 640, and here you had uh, the low was 490. So you had about 150 points on the crude. If you didn't take a partial, you're in trouble. We start taking out this level here. I think that 63, 63 and a half is next, acting kind of lousy here, if you ask me. And also on Monday, put out a sell in the S&Ps all the way up here at 4207 right here. Was good for, I took 15 handles out of what was a 70 handle play. Okay, almost, yeah, 77 handle play. This is going to be a very important area in the S&Ps. This moving average is 50 on the 2-hour. You see it was contained here. I know a lot of people are talking about new highs, 4,300, 44. I could see that happening in the S&Ps. I mean, we break through here, we could make new highs. But I was pointing out the relative weakness in NASDAQ. NASDAQ compared to S&Ps, same time frame. Look how much further off the spike low we are in S&Ps compared to NASDAQ on the verge of retesting these levels. So NASDAQ continues to be the preferred short over S&Ps, and when you look at it, was not a good week. So now that we're ending the end of the week tomorrow, good time to take a look at weeklies. I call this a pretty negative week in uh, the NASDAQ. We had that 2 week reversal and good follow through this week, so we're still on a weekly sell in NASDAQ. Um, the S&Ps, their weekly, their weekly off number this week was 41.75, so we're even 9 handles on the S&Ps. Look again at the difference in the weekly candles. It's almost like a little dot here in S&Ps where look at that big difference. So preferred short NASDAQ, maybe we're going to make a move back down towards 12,000. This looks like a 1-2 drive to a top here that we have. Cable, I guess the BOE gave us some kind of spike that we had in cable early in the day. I think this was the candle here. Uh, Caught in this range back over 139.50. I think you could be looking for, well over 140 and then back under 138 and a half. I think you'll be looking for 36. So what do you do here? Nothing. Okay. It's okay to do nothing. And it's okay to do nothing until after the NFP announcement tomorrow or even into next week. Something that I believe in. Don't try and make your week on a Friday. All right. Perhaps NFP is the exception where you get some inflection points off the NFP. But in general, say for example, you're having a slightly down week or you're flat and you go, well, guy, I have to make my weekly numbers. Don't try and do it on Friday. Fridays mainly are follow through days and book squaring in front of the weekend and choppy trade. So it's not the best day to be aggressive in the market, although there could be some, interesting setups after the NFP tomorrow. U.S. dollar yen still, still acting okay. Looks like we have a little bit of a descending triangle right now. This is an I don't know. I know some people that are looking for one more push up in yields. I'm not sure that's going to happen. It looks like it could. We've been moving sideways in this range between 150 and 177. Perhaps we get, if we get a strong number, 1 million jobs growth, that maybe rates head up one more time. Higher rates is supportive of U.S. dollar yen. Right now, it looks like we might get some type of ABC, ABC right here. Okay. And Aussie still looking like it wants to push higher. Canada can't get out of its own way. I tried it yesterday. We're right at the divergence line. Trade didn't work. I did it. I'm down 60 pips on this. But the S&P short from that 4207 level was a pretty good short. Oil, I still would stay with oil. I still think we're headed lower. And we're starting to get a little bit of a pop in stock indexes that are going to do well. If we are going to go to new highs in the S&Ps, most likely it's going to accompany a weaker dollar and we're going to make a new low. Some people are saying that this, I thought this week that we'd get through 91.42 after buying this pullback. Several attempts. We haven't done it yet, but doesn't mean it won't. But if the S&Ps are going to rally to 43, 4,400, then I would say that this dollar bounce is about all we're going to have. Although, you look at the 4 hour and perhaps they could turn it, but nothing wrong with buying a market after it proves itself. That'll be up at the 91.46 level, right? So it looks like silver just made a new high. We are diverging up here. Did gold do it? Gold, I think, as well. made a new high, still diverging. So we'll see. I mean, it's great action in the gold right here, but when I look at the gold longer term, it does look okay. There's no reason really to short it. Maybe we're heading back towards 1820, 1850, and a lot hinges on what happens here. Remember, the 1860 level held. Maybe we're going to get something like that from here. That could take it all the way up to 1855. Okay, so that's the way it looks to me. Silver made a new high at 27.15, and the gold silver ratio is still favoring the silver, way outperforming the gold here. So the weak dollar is all it took to spark this. Just want to show you guys one of the NASDAQ ETFs that had a very good week. Perhaps we get a pullback, and I don't think we'll trade much below 11. It's going to be interesting to see what kind of recovery we get in the S&Ps. I mean, I'm not that impressed yet. We're up 150 and NASDAQ's still down 6. Maybe we're going to get some type of ABC. I think a strong number the market will like it. The market is like strong numbers, weak numbers. Strong numbers means the economy is recovering. Weak numbers mean that Paul's not going to even consider tapering in the near future. So let's see what else we could cover. Copper as well has made a new high, but still diverging. Here you go. So here's copper at 457. See this? So we've been diverging since late April from this high here. Diverged here, diverged here, diverged here. We're so close to a copper top, I could smell it. So um, I'm scaling into this, and we'll see what happens. I still think that there's some type of short developing here in copper, even on the daily. Okay, we had a confirmed high, which normally means when you're moving sideways. I'm do a little teaching here, but I don't only use RSI for um, turning points and divergences. There's also a lot of value in knowing whether highs and lows are confirmed, because as a trader with a confirmed high, the probabilities are with momentum at 86 on the RSI that you should buy a pullback, because markets rarely peak on confirmed highs. Okay, and we had a little pullback, move sideways, and now we're having a new high here and diverging. So we have divergence on the daily, um, really glaring divergence in the copper on the 4 hour, right? And so I think it might be one of the better shorts because it's economically sensitive, and it really has come a long way. So looking for some counter trend things to do there as well, and want you to pay attention to both confirmed highs, confirmed lows, and when you have these, as a trader, a confirmed high that you want to buy the break. Okay, so there you have it. Um, Bitcoin still looks like a potential failing rally to me after this break. I talked about this before. I don't think we're going to make a new high to 64,000. And in fact, I have targets. We'll see if they ever manifest down here around 36.5 in Bitcoin. Any questions on anything I've covered so far? Okay. Okay. The Mexican peso is a pretty good indicator of risk off when US, similar to CAD. When US dollar, when the market is under pressure, like it was up until a few days ago, um, we had this little pop up and It looks like a higher low, even though the market was making higher highs. US dollar MEX was making a higher low. To me, that's interesting as well. And the VIX, a lot of people were talking about this 19 level being a breakdown, and I know they turned the market back here um, on this big spike that we had, but looks like we still want to close above 19. And we'll see, everything's going to hang in the balance with what's happening with the NFP tomorrow. And want to talk about the gold shares are acting pretty good, but just something else. It's almost a continuation of it. See how gold has really outperformed. Same time frame as Newmont, right? So gold has taken out these highs. Newmont has not. So the gold shares are lagging a bit. So I'd be a bit careful. I'd be careful about getting too aggressive on the long side of metals. Maybe Reddit can contain them or not. Let's see what the high is here. Probably blew out. Yeah, we blew out the divergence there. So there we go. On a lot of time frames, we're blowing out the divergence. Newsflash, I was wrong. I'm stopped out of silver now. Okay. Um, there really isn't that much more I want to cover. I just want everyone to be pretty careful about the NFP tomorrow. I think it could be a big market mover. I haven't completely given up on the dollar having a chance to turn back up. And of course, you are not going to be wrong on this trade until we take out this low. Taking out this low is not necessarily bearish. Some people would say, well, we're developing a right shoulder. But I still think that there's one more shot above 91.40 before we make new lows. Although I booked most of my currency pairs, I'm pretty flat going into the NFP tomorrow. Recommend that you do the same thing and we'll react to it. And so, I think it was a good week with successful calls in euro, successful call in the S&P. The short from 4207 still looks good. Successful call in oil from the highs still looks okay. And the jury's out in the Dixie, but we had this nice little run from here to here. I'm trying to think what else. A losing trade in silver. Looks like the Reddit guys are taking control. Didn't think they would. And a new high in gold as well. So, a couple of things that people on Twitter, if you engage on Twitter, that you're going to find very few people most people have a hard time saying these two things. I don't know, and I was wrong. So I don't, because everyone's going to be wrong. It's okay to be wrong. It's not okay to stay wrong. And having a hard stop in there prevents you from saying, well, you know what, I'm just going to see how it goes. You know how I know that? I've seen countless people doing that, whereas a day trade will turn into a swing trade and then a position trade and then an investment. So you have to define your risk before it. Don't move your stops around too much. I'm not saying I never have, but you have to have your stop in there. Otherwise, your emotions kick in and you just say, well, I'm going to give it a little time. Maybe I'll average out. Don't do that at home. Okay. So I'm trying to see what else there really is to review going into um, the NFP tomorrow. I would actually perhaps try a dollar buy down here, maybe around the 80 level with stops under the lows. Um, it looks like euro. I don't know. A lot of people are saying this was it, just a short correction. And when I look at the weekly, it did nothing wrong on the week. So perhaps we are going to make a move towards 22, and that was it. And that should be bullish for the market. But I'm telling you, the S&Ps have not been making much hay out of a weak dollar. So here's the dollar being weak, and here's the S&Ps being weak. So normally a weak dollar is risk on. We had that a couple of days this week when the dollar was weaker and stock indexes could not take advantage of it. So, just kind of a negative sign for the markets. I would love to see the S&Ps get through 4180 and rally into, mid-month or the end of the month at new highs. But I have serious reservations that that's going to be enough to take NASDAQ to new highs. So if you want to be long stock indexes, S&Ps are the ones, not NASDAQ. And if you want to be short stock indices, the NASDAQ is your preferred short. So when you're bearish, you sell rallies in NASDAQ, and when you're bullish, you buy breaks in S&P. Euro pound's putting in a real big day. Again, central bank activity, it's something that can change the trend in a pretty big way. I was right when we were doing this that euro was your preferred short and cable was your preferred long, and cable and that worked with the move from 20 21 and a half to 1980. So, and then from 2070 to 1980. So looking at the week, see where that held? So right on that moving average, the candlestick went right there. And underneath that candlestick, there's problems. Okay, the Aussie looks like it may want to attempt another high. We had this stop hunt right here that took out the stops above these highs, and we've held support. So with gold acting good and copper pushing new highs, tough to be short the Aussie. In fact, the Aussie gave you very little this week compared to what Euro gave you down here. So I'm not sure I want to be bullish Euro looking for new highs. In fact, right now in a lot of these markets, which if you go back and listen to my videos Monday, Tuesday, Wednesday, I had a lot of confidence and conviction. And today you'll notice I don't have as much, especially in front of a red number. And, it's okay now for me to really not know what's going to happen and just let the markets trade around until something compelling comes my way and that I see, and let go of my biases and see how things trade tomorrow after the NFP and into early next week. There is kind of a pattern that when you get a strong week, a strong weekly close to the upside, you normally have follow through on Monday, and then you could look for a turn Tuesday, Wednesday. Therefore, the term turnaround Tuesday. People have told me that it's a ridiculous thing, but I've seen many turns on Tuesday. It's just an old trading pattern that when you close weak or negative on the week, you normally get lower on Monday, and your chance for a turn would be um, Tuesday, Wednesday. So it's possible I don't even pull the trigger until then. And I'd say that oil's acting pretty lousy with the weak dollar. Of course, the metals are acting great. So maybe what Yellen said and changed her course that created this candle when she said we may have to do something about rates. I think she forgot she was Treasury Secretary and thought she was a Fed chairman again. And so I tried to sell the rally here, and here we are at new highs in the gold. Take a look at the weekly. There's some resistance coming in here a little higher, but it looks good. It looks good for now, and maybe we're on our way to new highs in the gold. Maybe this was it. I thought we'd have one more jiggle back down towards 1600. I'm still not sure that's not going to happen. Anyway, I want to remind everyone to take time to register at tradegatehub.com and get used to the platform. It's chocked full of great uh, content and news and Twitter feeds and discussions, and you can contribute on it and become part of our community. And you may want to just go to TradeGate Hub and take the tour and look around. I want to wish everyone good luck tomorrow after the NFP. Remember, it's okay to do nothing. And sometimes you see the market's better when you're flat. Looking forward to trying to replicate um, this week, next week. And this is remember to not just count your pips, but count your blessings and do your work over the weekend. You know, plan your trades over the weekend. Most of the trades that were done this week were the thought and the execution was developed last Saturday. And then when the markets got to those levels, I executed. So it's better than just trading on the fly and saying, this looks good. Plan your trades and then execute them. And the best time to do that is when markets are closed. Okay, so you're not distracted by market movements. And so use the weekend productively so that you can be ready. You have your analysis done and you're ready to trade next week instead of just coming in cold and looking around for something to do. And with that being said, that's my coaching for you. Most of my best trades are done on the kitchen table on Saturday. That sets me up for the week. So plan your trades. It will also help prevent impulse trading, which is really a downfall of most people, and FOMO. So if you have a plan, it's going to help restrain you from making the two biggest mistakes you can make as a trader. And that definitely is FOMO and impulse trading. I look forward to adding value again next week to what you're trying to accomplish as a trader. It's not an easy thing to do. It's not an easy thing to do, and there is no secret. In fact, I have an expression: the secret to trading is there is none. It's hard work and living through adversity, and if that scares you, do something else. And with that being said, everyone have a great weekend. Don't just count your pips, count your blessings. And this is the coach saying goodbye. Have a great weekend. Looking forward to working with you again next